In 2008, at the height of the financial crisis, something happened on the German stock market that no one expected, and most hedge funds would prefer to forget. This is the story of the Volkswagen short squeeze, a moment when one of the world's largest car companies briefly became the most valuable corporation on Earth. By accident. Volkswagen had always been a solid industrial company. Not glamorous, not exciting, just reliable. But behind the scenes, hedge funds were convinced that the stock was overvalued. They expected the price to fall, and they took massive short positions. Billions were bet against Volkswagen. A classic strategy. Or so they thought. In the background, another player was quietly building its position. Porsche. For years, Porsche had been buying Volkswagen shares, slowly, carefully, and without making much noise. Most investors assumed Porsche held around 30% of the company. But then, on October 26, 2008, Porsche dropped a bombshell. The company announced that, through shares and options, it effectively controlled almost 75% of all Volkswagen stock. The state of Lower Saxony owned another 20%, which meant only about 5% of all shares were actually available on the open market. A shockwave hit the financial world. Suddenly, hedge funds realized they were trapped. They had borrowed and sold far more shares than the market could possibly supply. There simply weren't enough shares left to buy back. The only way out was to pay whatever price the market demanded. The squeeze began immediately. Volkswagen's share price exploded, rising faster than anyone thought possible. Within hours, it surged past 500 euros, then 700, then 900. And at its peak, it briefly crossed 1,000 euros per share. For one historic moment, Volkswagen became, on paper, the most valuable company in the world. Bigger than Exxon, bigger than Google, bigger than any automaker had ever been. Hedge funds lost billions. Some barely survived, others didn't. Porsche, on the other hand, had executed one of the most effective, unexpected strategic moves in corporate history, even if the company later faced its own financial challenges. In the end, the Volkswagen short squeeze became a symbol, a reminder of how quickly markets can turn, how dangerous excessive short selling can be, and how even the most experienced financial institutions can be caught off guard when the balance of supply and demand suddenly collapses. What happened in 2008 was more than a spike in a stock chart. It was a moment where the entire financial world realized sometimes the market doesn't care about models, strategies, or confidence. Sometimes it just snaps, violently.